Many investors are watching the US-Iran situation and are looking for stocks, looking for opportunities, looking for ways to benefit from it or to some kind of play around it. And we all have those tendencies to try to find some stock or do something to benefit from an underlying situation. I'm going to talk about those stocks today. Some really interesting stocks. Maybe you never heard of them before. Not a lot of people talk about them. And some really under the radar opportunities that are not too obvious, and those are my favorites. So I really hope you enjoy it as always. Now, the first tendency for most investors is to go and buy the oil stocks and buy the defense stocks because those are the obvious bets, and those should boost the best, especially if they close the Strait of Hormuz, where over 20% of the oil supplies they pretty much go through the strait. So oil is still trading at $67 per barrel, and it could potentially go much, much higher even after Monday. Oil could potentially explode. People are saying $100 a barrel, $200 a barrel. But if you're buying oil on Monday, I believe it will most likely be the wrong decision. Because if you look at the divergence between crude oil and XLE, which is the oil stocks, there has been a massive, massive divergence over the last 6 months because a lot of people were anticipating this event to happen. And I believe the oil stocks have front-ran this event, and a lot of that stuff has made itself in the price. A lot of them, guys, are really, really expensive. And what a lot of people are not paying attention to is that after this event is over, this event is extremely bearish for oil. And I'm an oil bull. I've owned stocks from last year. I've been buying oil stocks. But this is a very bearish event for oil in general over the next few years. If you look at the largest producers of oil, Iran is like number 5, and there has been a lot of sanctions on Iran. So if there's a different government over the next 6 to 12 months and those sanctions are lifted, this is extremely bearish for the price of oil. Iran has the 3rd or 4th largest reserves in the world. So a lot of production, crude oil, could potentially come from there. And that's really bad for the price of oil again. And you have OPEC, which has been recently raising the output. They raised it again just today, and they could potentially raise it a little bit more over the next few months. All those things are extremely bearish for oil over the next 3 to 6 months, even I should say over really the long term. And you also have to remember, you have the presidency, or I should say the midterm elections in November 3rd of 2026. And I'm sure they don't want higher oil prices into the midterms. So the government is going to do whatever they could do to try to suppress oil prices in the second half, including potentially selling from the strategic petroleum reserves. They've been filling it up. Maybe they're going to start selling it again. But they're going to do whatever it takes for American people not to have very high oil prices going into a midterm elections, and this is a crucial elections. So if you look at the current event, it looks like it's really bullish for oil, and oil is going to the moon, and it could go to the moon for a few days, for a week or two. But if we're talking on a longer term basis, there's a lot of potential catalyst, or a lot of headwinds that could cause oil to reverse and potentially go much, much lower, back to $55 to $60 per barrel. So for me personally, oil is not the bet here. And it's the same thing with aerospace and defense. A lot of the defense stocks, Lockheed Martin, are extremely, extremely expensive. And you have to also have your second level thinking and take into consideration a potential new administration on the midterm elections. Maybe the other party is going to take a piece of Congress, and then it's not going to be as easy to approve massive hikes in defense spending, and those defense stocks could correct. So everything right now looks really bullish. Everyone wants to go all in on those stocks, but if you take a 3 to 6 months look, there's a lot of headwinds on defense, there's a lot of headwinds on the oil stocks, and a lot of those things have made it themselves in the price. And I believe those two things are the wrong bet over here. Now, what I'm personally looking at is some of those stocks in those countries. They are neighboring countries, I would say, and they're being affected by it. One of them is UAE. If you look at UAE, there's 2 stocks that I've been watching over there. One of them is Emaar. Emaar is the one that built the Burj Khalifa. They built Dubai Mall. They built a lot of iconic properties. And this developer is trading at 6 times earnings. I'm not kidding. You can look it up. It's trading at 6 times earnings. This is dirt cheap. And a lot of those drones have been hitting those buildings there, and it could affect the market for a while. But still, you're buying it at 6 times earnings. If it goes lower, could be trading at 3 or 4 times earnings, potentially below liquidation value. To me, those opportunities are really, really interesting. And those are much more interesting to me than buying oil or buying defense that everyone else is buying, and those stocks that are going to be up like crazy on Monday. I'm doing my, you could say, Howard Mark called it second level thinking, and that looks really interesting to me. Something else that I'm looking at is the stock exchange in Dubai or even in Saudi Arabia, but the one in Dubai in the UAE is much, much cheaper than the one in Saudi Arabia. But you also get the Nasdaq Dubai, which 67% of it is owned by this entity, but the government also owns a piece of it. So a lot of the stocks over there are kind of owned by the government in some way, like 19% is float, and then Bourse Dubai, which is partially owned by the government, owns 80% of the company. So you have to kind of study those. But this stock, as an example, is trading at 22 times earnings, one of its lowest valuation ever. And if it goes lower, could be trading at 18, 17, 16 times earnings for a market in UAE that's rapidly growing for a lot of investment products. They don't invest as much as we invest in the United States. It's not within the culture, but it's been getting better. Total traded value expanded 63%. Average trades per day expanded 31%. So it's starting to grow. And if you're buying it at 17, 16, or 18 times earnings, if it goes lower, that would be a really good deal. Now, the good thing is, or you would say the bad thing is, they close their market for Monday and Tuesday. So you have a few days to potentially research those stocks. And if you'd like access to my research and my opinion on those stocks and if I potentially buy them or not, I share everything I do in my own group. This is the link if you're interested. But if you want to keep it simple, you could just buy the tech stocks, the big seven, just stocks in the United States. If they go down on such events, although I don't think so, but if they do, that's an amazing opportunity. It's not going to affect Microsoft, it's not going to affect Meta, it's not going to affect Google. Those companies will be fine if something happens or if something doesn't happen. But if you're looking for something a little bit different, I personally wouldn't be betting on oil. I personally wouldn't be betting on defense-related stocks. I would be looking into some stocks in those markets in Saudi Arabia and UAEs or hated 5-6 times earnings. To me, this is really, really interesting. So I hope you got some ideas. Hope you enjoyed the video. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.